Hey everybody, Matt Covey, Covey Real Estate. Hope everybody's doing well. Start of February, sun is shining, and it's a great time to be outside. Here is some updates for you in February, and I want to be able to show you some of the statistics and just some of my take on what's happening. So this past week I went in and posted a couple of things online specific to first-time home buyers or investors and said, hey, here's my blog, and I'll put a link to my blog below, but that you have the opportunity right now, sort of between where you have lower interest rates coming, that's anticipated. Everybody thinks there's these lower interest rates coming. They could be. I'm not sure the timing. Everyone I'm talking to is saying there's going to be coming into the summer. And that usually has, just before it happens, some front-end pressure to push up buyers' will to go out and buy because they've got pre-approvals in place, and maybe there's some incentive for them to get into houses because they're going to get better rates. At the same time, you've got all these houses, and I've posted about this before too, vacancies. The number of houses on the market that are vacant is pretty much all-time high for the last 10 years. There's been 5 months in the past 10 years, where there's been greater than 40% of houses sold that are vacant. And that could be good reasons or bad reasons. It's up to you to think what that could be. But if houses are vacant, there's likely an inclination to sell them, or could be an inclination to sell them more than not. And if that is the inclination, you look at November, December, and January. November 23, December 23, January 24, all those months in Ottawa, the entire market, greater than 40% of houses sold were vacant. So you've got those pressures, those seller pressures, I think, hitting the market and saying, hey, push some prices down. At the same time, a lot of sellers hanging on because they see what could be interest rate decreases, and they're waiting to see if buyers are going to, instead of them coming down, buyers are going to come up to where they're at. And I think that's what you're seeing, a lot of hold positions in the market. So there's a lot more interesting facts and things coming out of the behaviors of this winter coming into the spring that I'm going to show you now, so you can see what's happening and why I think it's indicative of a normal Ottawa market that's coming back into place with forward basis. So look, let's take a look at the statistics. Here is the average days on market. So what you're seeing is it's jumped into January of 2024 from December. And what that jump is back in terms of average days on market. You're seeing that average days on market back up to 50 days. This is a rate number we haven't seen since around 2018, right? January 2018 is the last time we saw it up this high. Is that abnormal? Well, it feels abnormal because we're 2024, so it's been 6 years since we've been there. But back in 2018 and the years prior, totally normal. In fact, it was up. It used to get up much higher in the winter, the average days on market for houses, right? So again, here we are into abnormal feeling for the past couple of years, but for those people that have been in the market for a while, it's back to a fairly likely normal market for the average days on market. Interesting to see just how closely it's tracking to 2018. The showings per listing is the next statistic. So this is not sold, not how many showings it takes to sell a house, but rather just if you take all of the listings that are out there, how many on average showings do they get? 5.2. So when you look at that 5.2 number, again, it's getting back up, and it's a behavioral issue in my opinion. You're seeing a lot fewer people go out to look at houses, and people are just getting back into normal behavior of going back into looking at houses, because this statistic is really only tracked by Ottawa real estate since about 2018. So it's hard. You can't go back 10 years. You can only go back about 5-6 years. But when you look at that statistic, we don't really know how to compare it other than to say, look, we were here back in around 2018, right? We don't have this crazy market that was happening over the 2019 to 2022 period, and with all the extra showings. So there's another big thing. Showing is coming back into a more average. Months of supply, and this is a really interesting one. So this tracks almost exactly on a mirror in around the 2021 mark. So if you take the middle of 2021, say June of 2021, and you look at this chart, it's going up and down almost in tandem out, and they're going the opposite direction up. So if we were to flip the mirror on 2021 around June, we're tracing fairly closely in a reverse behavior, as if some event occurred in the middle of 2021, number of months supply. So if no new houses were to come on the market and everything were to start selling, how many months would it take for those to sell? Right now it's sitting around 2.1 months, which tends to be more indicative of what tends to be a seller's market. That's still a fairly low number, because if you look back into those previous years where we do have 10 years of data and more, you're tracking into the 2014, 15. We had through winter time, sometimes up to 6.5 months of inventory sitting on the market. In summertime came down as low as 4. We're still not even tracking close at our peak, whenever we're getting the peak number of houses for sale in the past 5 years, to get close to that, right? So again, really tracking into a more market specific to Ottawa being back into some level of stability. So last thing to discuss really is the average price. So where was the average price back when we were in that market versus where it is now, and what could be affecting why the price would stay high versus continue to go, versus to adjust downwards more. So back in around 2018, we were looking 2016, 2019, say we were in around the 400s. The average was around $400,000, give or take, maybe a little lower, maybe a little higher than that, depending. The average house was $400,000. And then where we are today is just above $600,000, $630,000, give or take, in around there. If the things that have changed are the pressures on what's happening in Canada. We have additional migrants coming to Canada. We have a lot more people working jobs. We have first-time home buyers entering the market a lot later. They're around 36 years old whenever they're entering the market, so they have more funds saved up. We have people that are downsizing a lot more, or what I consider right-sizing now a lot more. So there's a lot more of this turnover happening in the market, and the marketability of a house right now, and I've spoken to this before, your 3-bed, 2-bath, row unit, somewhere in the 500s is selling all day long. And so if the average price of a home is around $630,000 in Ottawa, it means you're going to have pressures that are up there for keeping those houses that are more expensive and that have bigger appointments in respect of bedrooms, bathrooms, land size, otherwise pulling the pressure up. And those are the things that would make me think that if we have the income levels to support the amount of mortgage payment that is required, say at $400,000, you're talking on a monthly basis around $2,600, give or take. It depends on your profile, but at a $400,000 mortgage, if you're around, say $2,600 a month in payment, a dual income household, maybe a lot of people end up having a secondary dwelling unit, maybe in their basement, and or there's another source of income coming in that they might have another family member living with them. That there's all these things allow for a lot more flexibility in budgets and allowing people to be able to afford these things. So a lot of pressures helping to keep those prices up. And because we're still seeing a lot of those 3-bed, 2-bath, even the new inventory selling fairly quickly in the $500,000 mark, I just don't think you're going to see much in the way of downward movement. And that may happen in other markets, that may happen in places outside of Ottawa, but the Ottawa market seems to be very well protected. So that is your long update, February 2024. I have a busy month ahead. A lot of people that I'm seeking input, going out, having meetings with them, discussing. I've got listings coming up in the spring, and I've certainly got more opportunity for people to have those discussions with, to be able to make sure whenever what change does occur coming into the summer, I'm guessing with respect to lower interest rates, if those people are ready to go, so am I, ready to go out, look at those houses, make sure that benefiting them by getting in. This is a good understanding of the market, and it's good to make sure that people that I'm have as clients, great clients, are able to see these and understand how it is I can help them based on how well I understand the markets That's your summary for February. Thanks everybody. Like and subscribe, and we'll talk to you soon. Bye for now.